Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of corporate finance. Today we're looking at an amendment, a do-over if you will, for New England Realty Associates Limited Partnership, or NERA. It seems like their last report wasn't quite perfect and they needed to go back and tweak some numbers. On September 12th of 2025, NERA filed this amendment to a previous report. This is actually an amendment to an amendment, which tells you they're really trying to get this right. The original report was about an acquisition they completed, and the First Amendment is specifically about adjusting some of the pro forma financial information. Pro forma, in simple terms, means as if something happened, so they're showing what the financials would look like after this acquisition. This filing is a Form 8K CAD, which is an amendment to a current report. Think of it as correcting or adding information to a report that was already filed. This particular amendment is number 2, meaning it's the second time they're tweaking the numbers related to this acquisition. The company we're looking at is New England Realty Associates Limited Partnership. They are a partnership that deals with real estate, as their name suggests, and they are traded on the NYSE American Exchange under the symbol NEN. Their main traded security is Class A limited partnership units. These are essentially shares or ownership stakes in the partnership. So what happened? Back in June of 2025, NERA announced they had completed an acquisition. This is a pretty big deal for any company as it can change their size, their market, and their financial picture. Then in September, they filed an amendment to that report to include financial statements, specifically pro forma financial information. This information shows how the company would have performed if the acquisition had already happened at the start of the period they are reporting on. Financial analysts and investors really look at this to understand the potential impact of big events like acquisitions. Now, the crucial part of this filing is that they are updating numbers that were already presented in the previous amendment. It's like they did the math for the as if scenario and then realized they made a small mistake or needed to clarify something. The correction specifically targets footnotes C and D of their pro forma financial statements. These footnotes deal with how the acquisition affects their pro forma taxable income and pro forma cash available by operations. Taxable income is the profit that a company owes taxes on. Cash available by operations is the cash a company generates from its day-to-day business activities. Both are super important for understanding a company's financial health and its ability to pay bills or invest. What this means is that the numbers they previously shared for these two crucial items have changed. They're not saying the entire deal was wrong, but the way they calculated its impact on taxable income and cash from operations needed a revision. Let's dive into what has changed. Under the pro forma scenario, the acquisition of Hill Estates et al., we can assume this means the acquired entity or entities would lead to a reduction in NERA's taxable income. For the year ending December 31, 2024, this acquisition is now projected to reduce their pro forma taxable income by about $21 million. This translates to a decrease of approximately $179.45 per unit. Now, what does a $21 million reduction in taxable income mean in simple terms? It means that after the acquisition, the company expects to pay less in taxes. While a smaller tax bill might seem good for immediate profits, it can also indicate a change in their profitability structure or a shift in where income is recognized. For investors holding units, a lower taxable income per unit might affect their personal tax implications if they receive distributions. Next, let's look at the cash available from operations. This is the money the business actually brings in from doing business. The filing states that this acquisition would cause a decrease of approximately $3 million in pro forma cash available by operations. This means an estimated 25.63 less in cash generated per unit. A decrease in cash from operations is often a red flag. It suggests that the acquired business might be consuming more cash, or might not be generating as much cash as initially anticipated. A $3 million drop in cash flow, especially when spread across units, can impact the partnership's ability to fund its operations, pay down debt, or distribute cash to partners. It's important to note what they didn't change. The company emphasizes that only these specific footnotes have been adjusted. All other information from the original reports remains the same. They want you to read this amendment alongside the previous filings to get the full picture. The report is signed by Ronald Brown, president of New Real NC, which is the general partner. This is the typical way these partnerships sign off on their filings, with the management of the general partner acting on behalf of the partnership itself. Now, let's put on our investor hat and think about what this all means. NERA is adjusting its pro forma financials after an acquisition, specifically the impact on taxable income and a less significant reduction in taxable income and a less significant reduction in cash available from operations. On the one hand, a $21 million reduction in taxable income might sound good because it means lower tax payments. However, if this reduction is due to the acquired business not being as profitable as expected or having different tax structures, it's something to watch. For instance, if the acquired entity has high depreciation or interest expenses, it could explain a lower taxable income. On the other hand, the $3 million decrease in cash available from operations is more concerning. Cash is king, as they say. A lower generation of cash from the core business activities can signal potential problems with the profitability of the acquired assets or integration challenges. It could mean that the acquired business consumes more resources than it brings in, impacting the partnership's overall cash flow. When you see a dip in cash flow from operations, it's important to ask why it's happening. Is it a temporary issue, or is it an inherent characteristic of the newly acquired business? The numbers here, $21 million dollar in taxable income and $3 million decrease in cash available from operations, need to be viewed in the context of NERA's overall size and financial situation, which we don't have in this specific filing but would be in the original reports. However, even without those specifics, a decrease in cash generation is generally a step in the wrong direction and warrants further investigation. The fact that they're filing an amendment indicates a desire for accuracy, which is good, but the nature of the adjustments, particularly the reduction in cash flow, raises questions about the acquisition's immediate financial impact. Looking at the bigger picture, NERA is publicly traded and operates in the real estate sector. Acquisitions are a common strategy for growth, but they also come with risks, especially if the acquired assets don't perform as expected. The market will likely be scrutinizing these numbers closely to see if the acquisition is truly adding value or creating financial indigestion per D. In conclusion, NERA has corrected its pro forma financial statements following an acquisition. While the taxable income reduction might be seen positively by some, the decrease in cash available from operations is a point of caution. Investors should keep a close eye on how NERA's cash flows develop following this acquisition and understand the specific reasons behind these adjustments. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.